Hello everyone, welcome back to another video. In today's video, what we're going to discuss is something more about footprint charts that we've not been doing for the recent few videos. So what we're essentially going to use is the tools that we have at our disposal, and we've done a few videos about it. For example, max, min, delta and COT high and low, how you can use them and find good trading opportunities. So it's got to do with the intraday trading opportunities that you can find, even a little bit of swing trading, wherein you take some position and maybe hold it for a day or two. And of course it's going to help the scalpers as well, because the footprint charts, the daily footprint charts are really good ways to find places to enter where you can get good 30-40 points if you're looking for an intraday trade, and of course 10-15 points if you're looking for a scalp trade in Nifty I'm talking about. So similarly, the points can be about 2 to 2.5 times if you're looking at levels in Bank Nifty. So for ease of understanding and convenience, we're going to look at a Nifty chart. Now one of the myths that I've been talking about in scalping, and particularly scalping, and also a little bit in intraday trading, is that you use a footprint, you see some imbalance levels and you can enter at any point you want, and these will hold. It is not so easy. There will be instances where the market will shake you out like this. Even though this was a good level to hold, it didn't. It just gave a little pullback. So what you have to understand is you have to interact or rather look at places where there was interaction at a higher level, or there has been interaction before at this point in the recent past. By recent past I mean a day or 2 days back, and these points give you really good entry places, or the location that we tend to call them. So for example, when you're looking at this chart, this is I think a Thursday chart. I will just contract everything so that we see plain candlesticks over here. And I really like to use I've talked about this in my previous videos also, I really like to use the contracted view and then get into the expanded view on these footprint charts. So for everybody's information, I'm using cluster charts over here, and how to configure them I have talked about in my previous videos. You can go and check it out. Otherwise I will do a video. If you like, you can just go and comment in the section if you want something to be done on how to set up the charts like I have. And I have shared my templates also some time back. You can go and check in the comments section of the previous videos. Nevertheless, moving on now, we will skip the Friday part for now, because the action or the auction that took place is really these are opportunities which are very limited over here, and you'll just get one or two. Even though you're scalping, you would be amazed. But I did try and find something here, and it is really difficult. You'll get really price action, or the footprints will not show you as much as you want to. I will just explain in a moment what I mean in some time. So I would rather look at this chart where we did get good opportunities. And when you find days like this and you enter a trade, even if you get break even or 2 points, by this time you would be aware that the auction that is going on is literally, there is nothing on offer, and it is better to step out, because you don't know something like this will happen at some point in the day. What you're seeing is, if you look at these 3-minute bars, they just got nothing. And even when looking at footprint, there was absolutely very little on offer. Anyway, let's move on to the Thursday chart. Now when I'm moving into this day, as I said, I like to contract my charts and look at places where I could see support resistances, not only from a price action point of view or volume profile point of view, but also from the imbalance point of view. So straight away when I look at this chart, I see, I'll just get out the rectangle tool over here so that we can mark these places. So I see this zone acting as an imbalance as well as a support or resistance zone, and it has done so for a lot of time. The other one that I can straight away see is this one. I will mark this one as well over here, and you see I am marking areas which are not only good places as far as price action is concerned, but also the imbalance levels are giving me one on top of that, which I'll keep in mind, and which are giving me good points where I can enter or at least monitor the activity that is going on. And if I find something favorable, of course I'm going to take an entry over there. So the next one is somewhere here, and the last one is, okay, let's just do this, and the last one is somewhere this. Okay, we just go to, so that we just can monitor the Thursday session. So these are the imbalance levels coinciding, if you see, with the support and resistance levels. So if you see, this is the one I've spoken about. So this is an imbalance level, that is why I've marked this. The market did give us a good breakdown from here. It again took a support from here, went up, halted here, again went up here, went down, took a resistance over here, went down, and the next day market opened over here. Okay, so now let's expand the chart and see what we could have gathered, or where could we have taken a good trade at these points. Now even if I didn't, you have to remember, I didn't know it's going to pan out this way, but all these points, so when the market hits this resistance zone the first time, we will go into support, and you can just go ahead and do your part and back test it, or look at these charts in the same manner I'm going to do over here. Now in the first time the market tests this zone, so a lot of us would be inclined, because this is a support zone, whether the market would try, and this is an imbalance zone on the sell side, would it take support and go up. Now when it enters here, what I'm really looking at, and I keep talking about it, is volume. Okay, the first thing I look at is there a volume surge as compared to the previous bars. So this one obviously had a good surge. Again, this was a short covering, and 4 to 2 is a good number in the middle of the day. For example, 10:30 to 12:30, this is a good number. When I see this, and if I want to take a long trade from here, what do I want to see? I will just show you in a moment. What I see later down in the day is the first thing is, I need to see whether these guys are getting absorbed or not. So when I see something like this, the first thing, when this candle closes, it's at the bottom, so I know that immediately the next candle is not going to offer me something of an absorption sort. So this candle is not where I can lean on to take an entry. The next one I see, again there is a sort of absorption, and you see here 1.89. now look at the delta over here, and look at the max delta that we have. It is a good number, and the min delta is less. Okay, now sorry, this is COT low, and the min delta is sorry, max delta is 0 and min delta is -1,562, and the bar closes on top. So this is one place where I see some sort of buyers have stepped in the form of passive buying, and because the delta and the min delta suggest that there was more of aggressive selling, which is not played out quite well, but the bar has closed on top. Now when I am looking at something like this, what I generally want is a pullback and a retest, and where I take an entry. Now I've talked about this a lot, and I will show you what I mean, and the difference why I was not inclined at this particular instance to take a long trade. Now when the next bar over here, the volume keeps decreasing over here, and we do see some sort of absorption, but look at the way this is reacting over here. Okay, so there is delta over here as well, and the bar again closes down. Okay, now what I wanted to see over here is, even if it breaks, it is not of consequence if it breaks, but the bar should have closed a little bit on top. Some sort of buying should have come, and you look at the COT low and high. So the COT high, I've spoken about this in my previous videos, means something on the lines of that from the high of the day till the point the bar closes, this is the delta, okay, from the last high of the day. So the COT high is -297, and the bar has closed right at the bottom over here. So this is not somewhere I would like to go long, and I do not want to chase catch the bottom. What I'm looking at is a place which could offer me some sort of absorption and a trigger for me to go long. When I see this bar, I am hesitant to go long, and one more bar similar to this bar takes place, and almost on similar volume, and again this is a balanced bar. So I know the two places where the buyers have stepped in are, one of them is this one, okay, and the other one is this one. But the what the price has done has, what it has done is kept going low. Now the other time I'm looking at a retest is somewhere here. Now this is what I want to see, okay, this is what I was talking about, and I want to see. When I see something like this, there is the only problem with this bar is it's low volume. It is okay, 1036, but I did enter somewhere here, and when I saw this not holding, this is a break even come out, because if you see something like this, it is coming back. What shouldn't have happened is after one retest, it should just go away from here. If it has touched this point again, you need to get out. That is the best part about Footprint. If you see your price again, that is this where we saw some sort of buying come in, you see everything is delta, they're all absorbed here, although the volume is not that high. But when I see the price again touch this is a good entry point for me. Again touch this, I have to get out, because my trade hasn't played like I wanted to. It shouldn't have come back here, and there is still more of selling left, and the reason for my entry was because I saw two places where there was buying coming in very close to each other, and the retest also gave me a signal that these guys are getting absorbed. So I entered somewhere here, and it did go in my favor for a little time, for about 8 to 10 points. And when I see it coming back, it's, this entry we have to get out, because it's come back to the point where we entered, and it was a valid entry, and we are close to the low. So the next thing that is going to happen is the low is going to get taken out, and the stops are going to be triggered again. Now the next time we get something like this is I'll just move on. You can see something very similar happening here, and you can see the volume pick up. So you can go and check this one also out, which was a good trade entry again on a retest over here. This low, I'll just mark it. This point, this high volumes and high delta, whereas high selling was taken, was all absorbed. You can see over here, and the bar gives a good up move, and on a retest it just comes over here. So this is a good entry point right over here. Okay, now after this, if you're still staying long looking for 30, 40, 50 points, you've got about 20 over here, and whenever the market comes back here, this is your exit point. It's exactly similar like this, because if this had to hold, it should not have broken this point over here and gone up from here. It hasn't. So either you book your profits over here if you're trailing them, and if you have not, and it's come back here, you need to get out at break even. So this one did give a good risk reward, where the risk was about 8 to 10 points like we generally do, and we did get 10 points and goes up. Now the other time which I really liked is when this breaks again, it goes down. We keep seeing something. This retest obviously failed, so it's going to go down, and you have to remember, these are the points which are not points that we have marked. So even though they're not points within intraday levels, this is for especially for scalpers. If you're looking at some good points which I spoke about, this was one, and the next one comes at exactly at the points or the levels that we had marked. Now look at this. This is again the same thing that has happened. Look at the volumes that have picked up. Now this is something really interesting, and I get intrigued by something like this. The volumes pick up, and look at the volumes. The delta is all negative until this point. Okay, and this is where someone steps in. It doesn't mean that we have to buy right here. As I keep saying, we don't intend to buy the lows or catch the lows. What we see over here is again a pickup in volume. Look at the delta over here. It is lesser than the other high volume bars, and the max delta is -412. The COT high is -329, which means from the high of the day, high of the last time it made a high, to the price where this closed. Okay, so you had -329 contracts, and they're clearly being absorbed over here. So like in the previous instances, what we have noticed here is there is some sort of buying that has stepped in here at a previous level that we have marked. Now we have to wait for a retest like we do. It gives us sort of an up move, and when it comes here, look at this price. The first time it comes here, you can either take an entry here. Look at this volume. Okay, it is as high as it gets, and look at this. Okay, so there is clearly some sort of aggressive buying also stepping in, and when you see a retest over here, it goes up to certain point, and this is our place which we don't want to break, as we've been discussing. And if it breaks, we will certainly get out. And what we see over here is this zone. When we see in the next bars, this is holding, and when we see a retest over here, what is interesting is this again holds. Okay, so this is our zone of entry. Anytime in these bars, this particular bar where we see a long good volume and a positive delta stepping in, and even this one doesn't break, so this is the place where we enter. Again, the stop loss being this place. Now look at the bar over here. Okay, the next time when it tests this place, okay, look at the delta. It's certainly turned positive. And even in the previous bar, this one, look at the delta that has taken place. It has turned positive over here. The max delta is 826, and the COT low and high, although they're negative over here, that is that in this bar, from the low of the bar to the time it closed, they were almost minus 183 contracts that were absorbed. Similarly, from the high time it made a new high to the close of the bar, it minus 38 contracts were short. So all this aggressive selling has been absorbed, because all of this, the bar has closed on top and is not able to break this zone. The second time again something like this happens. Now what you do, you keep your stop loss here, because this is a retest and we are looking for at a zone that has been protected in the past. And when this something like this happens, or it breaks over here, you can enter over here and your stop loss is just below this zone. So again, if you enter at 46 or 48, 138 or 136, 10 to 12 points is your stop loss, and you look to 15 to 18 points depending on the risk reward. And something like this happens. Now what is of real importance over here is, if you compare these bars with the previous bars, whenever there is a retest over here, look at the delta shift in delta over here, from all this to suddenly something like this that has started taking place in the follow-up bars, and the price has not tested this zone which is creeped in over here, and it has tried a lot of times with good volumes and it has failed. This one, where you see a good amount of delta, negative delta creep in, it tries to break, but again it fails. So this is an indication that what we're going to have or see is that this zone is going to hold at least till the next inflection point, that is somewhere here. Okay, at this place where we see a large down bar, and from where it got inflicted is this zone, followed by an imbalance zone. So this is the target that you should have when you're looking at taking a trade somewhere down there. And so you can use this particular method, wherein whenever you see a new low being made on a previous zone, you don't take an immediate entry. What you look for is a retest like we just saw. And when something like this happens and you see a shift in delta over here, which you just discussed, sellers getting absorbed and then passive buyers stepping in, followed by aggressive selling stepping in this bar, then again in this bar, just before this up move happens, you see all this with the negative COT high and low, but the delta and the max delta are high, and the bar hasn't closed at the bottom, unlike in the previous zones, and it has been unable to breach into this zone of interest over here, which we want to be defended, like we spoke in the previous examples, and it does give a good up move. Similarly, what you can see is something like this playing out in other zones. So when the market does touch this zone, and you see it is on the first time it touches is somewhere here on a high volume bar, and you see it's all buyers getting absorbed. Now what is really distinct about this pullback and this pullback is, look at the volumes that have kept going up over here. Okay, in this zone the volumes are up, but the price isn't moving down. This is a good indication that this zone is going to hold for the moment, and this is a zone that we've been interested in. Compare this to something like this. Okay, look at the volumes that were here, 1.38k, which by now you should be aware that these are the volumes that we have been interested in. 1.8, 1.4, 1.7, 1.94, something more than 2 is really drastic and good for us. And what we see here is 1.14 that stops, and look at these volumes. This is absolutely very weak selling. Look at these volumes. and 629 is one that breaks, and somewhere here is where we see some sort of, selling come in. Okay, this is the bar 1.08, and the bar closes right at the bottom. So this is not the bar that actually had some sort of selling. There was some absorption, but this is the bar where some sort of absorption has taken place. The bar closes below and gives a sort of a pullback exactly at the place that has been acting as a resistance before, and has now become a support. It takes a support, so this is another good entry point where you see a down bar followed by an up bar. But again, what I like to see is a test over here till this point, like we just spoke in the previous example, and then I maybe plan a long entry. This doesn't give an opportunity and just breaks out immediately. So it's okay to miss trades like this because this is not in accordance with the strategy, although it has given a pullback. If you look at the longer this thing, it has given a pullback like this. But this, you see this price action, I am not comfortable, because a lot of times what happens is these days it goes up to here and then breaks down. So if I wanted to take an entry, I would have wanted it to come again and retest this zone, and then maybe I would have planned for an entry depending on what I see on the footprint charts over here. Now it breaks out and it gives us a zone that we have marked. So anything that it tests again in this zone is a carry forward point. So I don't think the market has tested again ever at this point. So this is a zone that you can carry forward in any time in future. You test the 19200 zone to 190 to 200 zone, you can plan a trade just like we spoke about, and similarly you can find trades. There are some zones that are marked already over here. Now the other zones that you can carry forward, if the market, for example, opens gap down or gap up, let's say over here, and we do test this zone, this is a good entry point in future. Maybe on Monday or Tuesday, if we test, we can get a good trade off this place, because it's been acting as a good support or resistance along with the imbalance zone. So that is what I really look at. And the other good zone that we can mark over here is this one. Okay, so this is another zone that has been acting as a good support or resistance, and we can take these zones and trade these zones and find good trades and scalps at these zones. So hopefully this video was of some help in ways as to how to use the delta and COT high and low to find good trades on an intraday basis, or even scalps for that matter. So until next time, thank you, bye bye.